Hello, guys. Welcome back to another episode of Everything Business. And we continue in the series Books of Original Entry. And today we'll be looking at the sales journal or the sales daybook. All right. And so, in my last upload, we look at the purchases journal or the purchases daybook. So now let's look at the sales. All right. So, what is this book all about? Right. Now, the sales daybook or the sales journal is used to record goods sold on credit. Very important information for you to remember. Goods sold on credit. You cannot forget that no matter what, right? It can when you're talking about goods being sold on credit, it has to be goods and it has to be sold on credit for you to record it in the sales journal or the sales daybook. All right, so you have to remember that. The next thing that is very important is that the source document that you will use to record this information, it comes from the sales invoice. So the sales invoice is the source document that you will use to record this information from. Now in this book, you will find your debtors or your customers, you can call them, right? And this book is linked to the sales ledger. So it is important that you remember that this book is linked to the sales ledger, right? And if you remember from my last video, when we were talking about the purchases journal or the purchases daybook, right? You'll remember that I said that the purchases daybook or the purchases ledger is linked, right, to the purchases daybook, is linked to the purchases ledger. So that is very important information as well for you to remember. All right. So it is very important that you remember that. Okay. All right. So the next thing that you need to remember is that the book is linked to the ledgers, and we said that already. So let's look at an example, right? Let's look at an example. So an example of a purchases or a sales rather daybook. If you look at how it is drawn up, it is pretty similar to the purchases daybook or the purchases journal. As I was saying in the last upload, all journals look the same, right? They have the same amount of columns, right? The only thing that you find different is the title, obviously, and the details. And so instead of having your suppliers here or your creditors, you have customers there, right? Very good. So let's look at the first transaction that we have here. The first transaction that we have here, it says June 5, sold goods on credit to M. Dillon for $100, giving a discount of 10%. Now, the same rules as the purchases journal apply here. This 10% is what we would call a trade discount. And we do not record trade discounts in the books. All right. So we would have to now find out what this 10% would work out to be, right? And then subtracting it from the amount that we should pay for the items that were taken, and then we will get the amount that we actually are going to pay. So 10% of 100, right, is $10, and it's very easy to work that out. 10 divided by 100 multiplied by 100, and you get 10. So the amount for the discount is $10. Now you would have to subtract $10 from 100, which would leave us with $90. So you realize that we have not recorded the discount. We take that out. That's not going to be in the books any at all. Where you would find it is on the sales invoice. So you would find that discount on the sales invoice. Trade discounts are not recorded in the books. All right. Now, if you look over here, I have my sales ledger. Remember that the sales daybook is linked to the sales ledger, and I have M. Dillon's account. M. Dillon is a debtor to the business, which is an asset to the business. And if you want to increase your asset account, you have to make a debit entry. That is one explanation why we would debit M. Dillon's account. Another explanation that's technically not correct, but it helps people to understand, is that M. Dillon is receiving goods, right? And he's receiving $90 worth of goods. So you would put the information on the debit side. All right. Likewise, you write in the date, You write in the name of the customer, which is M. Dillon, right? You write in SL, stand for sales ledger. In the journal, you could even put the specific page if you know it. If the question give it to you, let's say it is page 2, you write it there, and then you write in the amount. For F. Jacobs, right, it says that we sold goods on credit to F. Jacobs for $300 after allowing him a discount of 25%. This is also a trade discount, so we would have to find 25% of $300. So 25% of $300 would be 25 divided by 100 multiplied by 300, and that gives us $75. Now $75 would have been the discount. We don't record discounts, especially trade discounts, in these books, and so we have to subtract that $75 from the 300, which would leave us with $225. All right, so we write in the date June 8th, the name of our customer, F. Jacob, where we can find the other side of the transaction, which is in the sales ledger. And let's say we know the exact page, which is page 3. So we write page number there. They call it the folder number, same thing, right? And then now we have this amount of money here, right? Now we're going to go over to our sales ledger, record the information on the debit side. Remember that? Debit side of F. Jacob's account. Now we are going to balance off our sales journal. So it is 225 plus 90, which would leave us with $315. So for the end of the month, June 30, we write the narration transfer to the sales account, where in the general ledger on page, let's say page 9, right? 315, and we double line this figure. Go over to our general ledger now in our sales account. Now, if you remember from double entry, the sales account is always credited, right? That was a tip that I gave when I did double entry. And if you have not yet seen my double entry video, then you need to check out that video. All right. So June 30, total credit sales for the month. That is really what we are recording, right? And the amount is 315, and we would double line this amount as well, right? Just like the purchases account in the general ledger, the sales account in the general ledger would show all the cash sales, and you want to put at the end of the month the total credit sales for the month. So it shows really both cash and credit sales, because you want to account for all sales, whether they be cash or credit. All right, and there you have it, right? Nothing difficult about the sales day book, right? It doesn't get much more difficult than this, right? The only difficulty that can come into either of these books, is the discounts that they will give you. You have to calculate the discounts, but other than that, it's just recording the information, know where and how to record the information. So thank you, and I'll see you in the next one. So stay tuned. Remember to like, subscribe, share, tell a friend, right? And God bless. Go in peace.